Hey everybody, it's your buddy Dow Jones Dave, and with a late report. I'm sorry I haven't done one in the last 2 weeks. To tell you the truth, getting all the data and stuff wears me out, and I'm too tired to make a video. Okay, let's get into it. First, we'll do the charts. Now, I know, there's thousands of competent chartists out there. So, I'm like, okay, I'll do the charts, but my feature is the numbers, and I've got some really interesting stuff that's happening in the numbers we'll get to, and I even made a chart for it so you can see what I'm going to be talking about. Technically, though, let's look at the chart. Now, this is relevant to me. I'm short-term trading right now, waiting for a big market meltdown so I can take long-term call options on market darlings. Okay, so the question is the market going to go up or down in the short term? I'm holding calls on Rivian Automotive, NEO, Verizon, Kenvue, and Bank of America. Verizon and Bank of America, I've exited both of those positions and then got back in when they turned green at about the same price and same cost. So I'm doing okay on those. Now, the question is, after holding over the weekend, is the market going to rally? And are those positions going to bear fruit? I believe they will. First of all, let's review. The market did tank down here to this line and below, about midway between this box, which is a really nice place. That's a solid support line there. Okay, and then it's just gone pretty much straight up since then. But I believe this is only the first move of the surge portion of a trend. Projecting this out, I would see something like this, some form of formation off the second move. We've got the first move, a little correction, and we should see a second move, because an up move like this doesn't just reverse, and a down move like this just doesn't. You see what I'm saying? So I expect this to rally, break this trend, and move the trend up to here. I hate this. Sometimes I really like this site for technical analysis, but sometimes I hate certain features of it, the way they work. So anyway, we've actually got a trend there. And we're considering this the pivot point, because we've got to move down there, and we've hit it twice. Now we have a move that's symmetrical with this one, and if you close in, a double bottom, the slightly higher secondary bottom. So right now we have a higher low. Will this rally up and break this trend? I think it will. We may see some more consolidation, but if you look at closing chart on the 4-hour, there it is. Looks like a little torch and flame forming, and torch and flames are pretty bullish. So, and that's my own name for a little formation that goes up and then kind of consolidates a little bit sideways. You can say it's in a box and it breaks out. Call it whatever you want. I call it a torch and flame. So anyway, I expect that's going to go up partially because of this 1 hour is about to turn up. On the 4-hour, it's still moving up, maybe possibly rolling over. But I think this 1 hour rotation here, in its position, I think it's probably going to pull this back up level. And the 1 day has just crossed and is moving. I just see this moving up higher. And that's why I held my calls over the weekend, even though they're going to get devalued badly because they're only out to September 22. Except for Verizon, it's September 29. So that's what I think. I think the market's going to rally. And my trades are calls on various stocks that I just mentioned. And I'm not recommending that you do this. Interesting that. See that? Just peeking over it. And here's futures after hours. So it's kind of dicking around with that a little bit. But generally you see more than one movement up in something like this when it moves up this hard. So I'm bullish on the Dow, at least for the next day or so. One thing that concerns me is bonds. The daily is flattening and getting awful close to, I don't know about that, because if bonds move up, they're going to pound the market down. But if we look at the 1 hour, it's gone a little bit level, but it's still heading down. As you see, it doubles a lot and is kind of anyway. So 1 hour isn't really that decisive, but we do see quite a strong divergence between the 1 hour direction of the MACD and the direction of the stock price, which is not bullish. It doesn't support a breakout, although that doesn't mean it's not going to break out, because it's looking pretty breaky outy right now. See, if it breaks above that, there'll be nowhere else to draw a downtrend from, and then we're going to be in an uptrend. So that's the one thing that kind of worries me. But the 4 hour says probably not, although it's still angled up. I don't know, that looks kind of pretty bullish, but not quite as bullish as the level. In other words, because it went up here and consolidated, and it's not technically that strong. But on a closing basis, on the 4 hour chart, bonds have broken out. So that could have real unpleasant aspects on the market. By the way, that this looks worse than it did when I looked at it earlier. So I'm like, oh, this is the first time I've seen it in a few hours. So now I'm like, wow, I don't know, man. Looks like we might be getting a breakout in bonds. I might have to liquidate my position. The S&P aren't reacting too well to this either. So at any rate, that's 8 minutes. Let's get into the numbers. What are the numbers, you say? Okay, first of all, here's my report. 3 weeks of earnings and dividend payouts. And sorry I didn't get an upload the last 2 weeks, but that's just the way it goes. So this is all the stuff that's been paid out and earned in the last few weeks, and prices should be current with Friday's close. This is my unadjusted industrials composite index. This is operating earnings. The next chart we're going to look at is net, but it's useful to the next series of numbers, where I also have a really nice, interesting chart, and a really interesting thing just happened, so stay tuned. The operating earnings, the dividend rate increased from 382 to 386. All these are annualized, by the way, these rate changes. Like, for instance, Apple's biannual, so its rate is doubled. I mean, its rate change is doubled since it's biannual. Though, based on their history, they're going to boost again. The same with Visa, but they cut their dividend, so that's doubled also because they're biannual. So anyway, that's how you read that. A is annual. Moving on. 52-week operating earnings estimate. That's up to date for the last week. It's up to 87.73, and growth estimates dropped from 14.26 to 13.52. These aren't negative numbers. Red just means possible concern or are not good. The reason this dropped is probably because a combination of earnings growing, i.e. last 12 months, and this is for the fiscal year end about 5 or 6 months from now. So these are also doubled for annualization. Next year's growth rate is 17.80%. So that would be a pretty good 1.5-year growth rate. PE is like 20 though. So the only way this is a buy is if you believe that the Dow Industrials Index is worth 2 times its growth rate in PE, which could be argued not so. I think about 1.5 is more reasonable because not all the Dow stocks trade at twice PE. Growth half of PE. In other words, PE is twice the growth rate. For a lot of the Dow stocks, that's fair value, but not all of them. So you figure 1.5 times, that would be 13.52 times 1.5 would be 20%. So we have fair value on the Dow. But you want to buy undervalue. So anyway, that's that segment. All right, I have 4 minutes to go through the next slide. My Dow Jones Industrials Composite Report. This was the last price I had on futures when I made the slide. The barometer's at 107, still not a long-term buy point. And what do we have? 52-week dividends went up just about $4. Yield went down because the price went up. 14-month net earnings grew again. So we've changed from red to green. Looks like maybe we've got a little trend here going, and something I expect, really, to tell you the truth, because 52-week earnings for the composite, although not all the individual stocks, are now lower than estimated year-end earnings, which means you've got growth rates now instead of negative. However, year to year, over year, net earnings are still down 15.8%, but that's less than their 16.4%, and that should tell you everything you need to know there. Dividends dropped because who was it? Visa cut their dividend. Dividend to EPS payout ratio is a problem. That's too high. They'll need growth to knock that down, and growth higher than the dividend growth to be able to maintain that. And it usually indicates you can have some more dividend cuts in the Dow, which is not bullish. So fundamentally, we're going to see a correction, I think. My barometer is at 107. Now, the interesting thing that happened is year-ago earnings, for the first time, dropped in quite a while, by the way. That means they're probably starting their journey down here to 1410. I've got that graphed out. Here's the year-ago earnings at 16. I don't know if you can see the one, but it's 1660 to 1690. So they went like from upper 1610s, upper 16, to up here, leveled. Now they're declining. They're going to end up down here because this already happened, this big decline. I don't have the data to track it, so I have to make it real time. And then we have 2 weeks of up, and then this is the estimates. I took the operating estimates from my index and converted them to the Dow scale. Not exactly accurate, because the only part of my composite components, all 30 stocks that I haven't updated yet, is the new net 12-month earnings, which I can use to match this, which is net, to accurately translate estimates to the Dow Jones Industrials Composite scale, which I'm going to be doing as soon as I get them updated. But this kind of describes what I think is going on. And what happens is, and this happens almost every time, is that the market melts down right into this kind of situation.